This is a soft ledger tutorial on how to move cash between group companies and have a group entity settle a bill on behalf of another group entity. We will begin by taking a look at how a cash transfer within a group can be processed by soft ledger. Let's take an example. Abacus Global is transferring $10,000 to Abacus US. The two companies are within a group together, Abacus Global being the parent entity of Abacus US. To action this, the finance team follow the steps which we will now run through. The first step taken is to enable intercompany entries in soft ledger. To do this, Settings is selected and followed by System. Next, Allow intercompany entries and allow intercompany eliminations must be turned on followed by Save. Intercompany entries can now be posted in soft ledger. Next, intercompany accounts are created. To do this, the Financials menu is selected and then Accounts. Then Add New is selected. Based on our example, an intercompany receivable account in Abacus Global and an intercompany payable account in Abacus US's books are required. Account number 1190 will be used for the intercompany receivable due from Abacus US. The description is intercompany receivable due from Abacus US, while the account type and subtype are asset and accounts receivable. A default related intercompany account can be set. In this example, an intercompany receivable in Abacus Global should be paired with an intercompany payable in Abacus US via this screen once an intercompany payable account has been created. Next, the account's location and natural balance should be set. Turn on the Include Child Locations option to enable use of the account by subsidiaries. Finally, click on Submit. The same steps are followed to create an intercompany payable account within Abacus US's books for the Abacus Global balance. Again, Add New is selected. Account number 3090 will be used for the intercompany payable due to Abacus Global. The description is intercompany payable due to Abacus Global, while the account type and subtype are liability and accounts payable. Within the intercompany account field, pair with the intercompany receivable due from Abacus US. This is the related intercompany receivable account which we have previously created. Next, the account's location and natural balance should be set. Note, the account location is still set to Abacus Global. This is to enable the posting of elimination entries for the intercompany payable to Abacus Global's books at a consolidated level. Turn on the Include Child Locations option. This enables use of the account by Abacus US. Then, click on Submit. Now the intercompany payable due to Abacus Global has been created and paired. The intercompany receivable created earlier should also be paired. To complete this, we locate the intercompany receivable account, then click on the three dots on the right-hand side of the screen. Click on the pencil icon to edit. Under Intercompany Account, choose the related account, Intercompany Payable due to Abacus Global. Click on Submit. The intercompany accounts are now set up and paired in soft ledger. To record the movement of cash from one entity to another, intercompany journal entries are created. To do this, under the Financial menu, select Journals. Then Add New to open a blank entry. The necessary information is then completed. A journal can either be a standard or reversing entry. In our example, a standard journal entry is required. Add in the reference and select the correct date and currency. Location, based on our example, is Abacus Global, the company transferring the cash, while the IC location is the receiving company, Abacus US. As we can see, filling in the intercompany location changes the structure of the entries below. Unshaded journal lines are journal entries for the location recording the transaction, in this case Abacus Global, while the shaded lines or intercompany lines are the related entries for the counterpart to the transaction, Abacus US. Complete the journal details based on the assigned location for each line. In the first line, for Abacus Global, a debit entry of 10,000 is posted to intercompany accounts receivable. The second line is the counter entry in Abacus US, where a credit of the same amount is posted to intercompany accounts payable. The third line is the other side of the journal entry for Abacus Global. This entry is a credit to the cash account of 10,000. While the last line is a debit to the cash Abacus US account. This is the account to where cash has been transferred. For consolidation purposes, we eliminate the intercompany entries for the intercompany accounts receivable and intercompany payable, which are in journal entry lines 1 and 2. Tick Eliminate to allow SoftLedger to create elimination entries. Finally, click on Submit. The entry is now available as a draft journal ready to be posted. After entering the draft journal, the effect will be seen in the trial balance. To see this, select Reports, then click on Trial Balance. Consolidated is the default view in SoftLedger. Looking at the Abacus Global's unconsolidated intercompany receivable due from Abacus US balance, an increase of $10,000 caused by the journal entry posted can be seen. Now looking at Abacus US unconsolidated intercompany payable due to Abacus Global balance, we notice an equivalent increase. Finally, looking at the consolidated balances of Abacus Global, it can be seen that the intercompany balances are removed via elimination entries. Now let's take a look at an example of a group entity settling a bill on behalf of another group entity. Abacus Global, the parent company, is paying a $20,000 rental bill on behalf of Abacus US, one of its subsidiaries. To action this, the finance team follow the steps which we will now demonstrate. The first step taken is to post the bill in SoftLedger. To do this, Accounts Payable is selected and then Bills. It is important to ensure that we are within the correct paying entity when adding the bill. In the case of our example, this is Abacus Global. Next, to add the new bill, Add New is selected. The necessary information should be completed on the blank bill. Add in vendor, reference, and dates. Select Abacus US as the intercompany location based on the example. Then, indicate details of the bill which are in our example, a $20,000 rental expense. Once completed, Submit should be selected to continue. The bill will then be posted as a draft. The draft is approved by selecting the bill and then clicking Approve. The status of the bill then changes to Approved. Now that the intercompany bill has been created, intercompany journal entries should follow. On the right of the screen, the IC location column shows the intercompany location of the bill with a document icon. To create the intercompany entry, the document icon is selected. A pop-out window now appears containing the bill details on top, and draft intercompany entries at the bottom are automatically created by SoftLedger for submission. In our example, we can see unshaded debit and credit entries on the screen. They are both for Abacus Global, the debit being an entry to the intercompany receivable account and the credit being an entry to the rental expense account. Note, these entries set up the intercompany receivable and remove the rental expense from Abacus Global's books. The second lines of each entry are for Abacus US, the entity which had the bill settled on its behalf. In the case of our example, this entry sets up the intercompany payable and records the rental expense in Abacus US's books. The third and fourth lines of each set of entries are journal entries to eliminate intercompany transactions at a consolidated level. Click on Submit to post the intercompany document journal entry. We can review the impact of the entries by reference to the respective trial balances of the entities concerned. Looking at Abacus Global's unconsolidated trial balance, we can see an increase in the accounts payable and intercompany receivable balances, caused by the posting of a rental invoice to be settled on Abacus US's behalf. Under Abacus US's trial balance, we can see an increase in the intercompany payable balance and rental expense as a result of the intercompany journal entry. Within Abacus Global's consolidated balances, an increase in accounts payable and rental expense can be seen. Intercompany accounts payable and receivable are eliminated in the trial balance via the elimination entries specified earlier. If you have any queries on the tutorial, please contact us at support@softledger.com.